G'day all, Ben here East West. Going to have a little dive into uranium as we do here each week. Looks like the market might be waiting for the CCJ earnings announcement that's coming up shortly. So we're a little bit sideways, guys, but let's just jump in and have a look and see what we can see. So I'm just going to start here with URA, and we're out here on a weekly. Now, you might recall the video I just did recently that where Chris and I, the Red Devil, looking at cup and handles. Now, rather than my childish, rather inept attempts to draw said cup and handle, you can probably see one formed here on the chart. But I did find, for those of you that use TradingView, I did find this kind of neat little indicator. So I'm just going to use this indicator for Kira, this guy, and it's cup and handle. So if you search cup and handle in the indicators, you'll find it. But it does a very nice, neat job of sketching out that cup and handle. So I'm just going to be using this indicator rather than trying to draw it in freehand. Bit neater. But what we can see here is that this is pretty much a good representation of a cup and handle on the weekly in URA. Okay. Now, the way that this guy has set this up is that he doesn't want to see the handle penetrate 50% of the cup's trough to peak, so to speak. So the 50% pullback, which is kind of what's been mentioned before. But nonetheless, we can see that this formation is still very much alive on the weekly, so that's a big picture thing. But of course, when you consider this, you've got to consider that the market still has room to fall all the way back here to sort of 20 into the 25, sort of $26-$25 range. As this is set up, because this is an algorithm, it needs a definite sort of cutoff point. If we get this low, of course, which 25.17 it represents 50% back, then this formation, as the algorithm is worked out, would cease to be there. But we could still come in here. We could test this trend. We've got these tops. There's a lot that could happen here on the weekly that, while the pullback might be deeper, it doesn't necessarily upset the chances of going further. It just means that per this cup and handle, that would break down and we have to look for something else. Now, just as we come in here and look at this on a daily, a few people would have seen the other pattern that we've got here, which has got a more bearish connotation. And maybe if this pattern plays out, it could wreck the cup and handle setup. And that, of course, is this head and shoulders pattern that's kind of set up here like this. So, quite a few people will probably be leaning on that as well, and sort of pointing that out, saying, well, you've got this sort of, you've got your head and your shoulders, and we're now coming down and approaching towards the neckline, and that, lines up with all these bottoms, and if this breaks, then, maybe we're going to give way a little bit there. So that is contra to that cup and handle setup. So I think the point here is that you can see a lot of different patterns in the market at any one given time, being bullish or bearish. It's just that we've got to come down and have a look at the nuts and bolts of what's going on, and see if we can figure out which one looks more likely to play out. So if we just strip it back to just make it a little bit simpler and just look at this is just the volume profile. I've fixed it off the bottom of this pivot here, okay? You probably can't quite see it, but just if I move this out of the way, I'm just using the bottom of this pivot, okay, where we had this big rally, and I'm just taking it all the way until today's close. We're still on a daily here. But, what we can see is what we already know, of course, is that here, there's a big fat volume spike there, which is telling me that this is a well-supported area, okay? The buyers look pretty keen in here. So what's that? Call that, you could probably just tighten that right back up, even into just, from here down, right? So, there's obviously buying here around this sort of 27.40, 27 sort of 50 area, a little bit lower, but all the way down here until, the sellers have tried to get it down here at 26.88. So you could probably say that sub $27, the buyers are finding it difficult to find sellers to sell to them, right? They can't find any sellers to interact with down here, and that's why the market has pushed away from that area pretty strongly more than once, okay? Now, the next pivot that we've got coming in here, and this will feed into the next, how we're looking at this. There's a bit more water to go under the bridge here, but what we've got here is we've got a third order pivot, okay? So that pivot just means that these are second order pivots. So it just means that this is the lowest pivot, and on either side we've got two higher pivots. So that's good. You can see it's actually generated by this orange line, which is a little bit hard to see. It's just on the indicator that I'm using. So what we've got here, though, is the genesis of a trend change in terms of so much as that if that holds and we can take this out, then we've got higher highs and higher lows. Okay, you've got this pivot was lower, but we've got a high here, a high pivot here, another high pivot here, which is higher. Now we've got this higher low, so that does look pretty good just on the initial setup. But we can't take that in isolation, because we've just got to look at what's happening, what's been happening this week, which is obviously bugger all. So this week has just seen us stuck in this trading range, effectively going nowhere, right? We're sort of 29.75 top side and 28 sort of 50 on the bottom side. So we're just stuck here. So if we come down here to an hourly, I mean, you can just see this range here that we're just not going anywhere. So it's kind of setting up nicely as a trading range. I don't think there's any sort of Wyckoff sort of work you could do here. Like, I don't think you even have to necessarily look at a trading range and look at it as being a Wyckoff sort of, that you've got to put that schematic on it. The only thing I'd say here is just look for a nice trading range like this that has a move that either tries to break out and rejects, or the other way, of course, is that it has a failed breakdown and comes back. I think when you see that out, in a trading range, and you see that phenomenon happen, that's when you just pay a bit of attention to say, okay, well, is this getting ready to break out the other way now? Because they tried to push it down, they couldn't do it, or they tried to push it up and it failed. So just coming into early next week, I mean, the thing I'd be looking at here mainly is just the fact that we're just off this last swing. We're just shying away here from this 50. Like, it's just tried a couple of times there. So really, what we want to see is, and this could be a problem. Okay, this could be the problem for the market if this is the range that it's stuck in. Is that we just come up here, we just tap this into this retracement zone and quickly reject away. Now, if I saw that, I'd be a little bit sus with the range, with the rejection at the retracement. I'd be thinking, okay, well, have I got a bit more of a substantial looking downtrend for me here? And when I say substantial, I mean I'm on an hourly, but you get the point, right? Then all of a sudden you're starting to think, oh well, okay, this is a leg, this is a corrective leg. It's not quite a bear flag. I mean, it almost is, but I think technically, if you're going to be precise, that the bear flag shouldn't go more than 50% the length of the pole. So we're not there yet, but it might just pop up like that, and then all of a sudden, we're coming down. So remains to be seen. I think, obviously, like I said, I think a lot swings off the CCJ earnings, because it looks like the market's just holding its breath for that. But that's where we're at. Okay, so that's how we sit with URA at the moment. So just moving in here now, it's CCJ. So we're on the daily, and here's the cup and handle that Chris and I, the Red Devil, were talking about. And this one obviously has been in the danger zone of falling below that sort of preordained 50% level, which, Chris talked about before, that, the 38 is more preferable. I think this line doesn't actually represent the 38, the way that this guy's had his algorithm set up, but I think it's close enough for practical use. If you're ever unsure, look, just grab the retracement and you just take the top to the bottom, and that's basically how it's been worked out. This doesn't line up to be the 38. I think he's got it set at the 33. So I think it's close enough. But nonetheless, this still remains intact. But I mean, it's the same thing, right? I think this is really, got the market just pausing. So we've got to think about what happened here, the last earnings, which was a bad earnings, and how the market responded. Okay, not great. It came off a fair bit. So the top to bottom move just off that sort of news was it dropped. I mean, the stock dropped 17% over the course of 18 days or 11 trading days. So we've got to be very mindful of that, because if the same thing happened, that's a big if. Well, we don't know what the earnings are going to be, but just say the market is round about where it is now. If this was going to drop that sort of same 17%, well, that's going to put us way down here. I mean, maybe it takes longer, but if the same sort of thing happened, then that would be the kind of move that you'd be looking at. That would destroy the cup and handle, but it would kind of bring us back into test this sort of area back down here, and it would kind of keep the thesis that I'm looking at alive, which is that we're in a great big trading range before we find wherever, and I expect that we'll eventually will break higher. But that big form, it might just start to play out that way that I've sort of been envisaging things might happen. But, that is all projection and guessing, and we've just got to look at what's happening this week. And you can just see that the market is just not very interested in going anywhere at the moment. So we'll just whip in here to the hourly, and you can just see we're just shy away of this swing. We're just shy away from that retracement zone, even though there's a little bit of a ray of hope here, because there is a bit of a building sort of wedge going in here, I suppose you could say. I mean, we've got a lot of sort of tops here that the market's kind of rejected away from, but we are getting these little swings higher. So, we're coming to a crescendo. That doesn't mean, of course, usually you'd see that, you'd expect it to mean it's going to break either up or it's going to break down. So, obviously the earnings are going to dictate what happens there. So I don't know if there's too much more to say about CCJ at the moment, because it just feels like these earnings are going to, propel the market one way or the other. And I think once that happens, then we can go back and have another little look at all the setups, what patterns have played out, which ones haven't, and what looks like the most likely path going forward from here. All right, now, sadly, it's not all beer and Skittles, because when I sort of look at this Sprott Physical Uranium Trust, this doesn't look as constructive. I mean, it's, it suffered under the weight of all the selling like the others, but a lot of the others bounced back to either reclaim this high, test it, or even break it. But this one is just struggling to make any headway. So I haven't looked at the Ichimoku setup for a while, primarily because we use Ichimoku when the market's trending like this, and now the trend's failed. It's not going to be as useful, except when we start getting cloud breaks on the weekly, which we're a fair way away from. But nonetheless, I would definitely, I would pay attention to this. Okay, so what we've got is a TK crossover. So what we've got is the Tenkan-sen. This is the weekly. The fast-moving momentum line is now crossed below the Kijun-sen, the slower-moving line. So, I guess it's pretty obvious to say that, that's going to happen as the market runs out of momentum, and now we've just got that little technical indicator that has just warned us about the current strength of the market, and the fact that it hasn't, even though it hasn't recovered it in time. Okay, so it hasn't recovered fast enough to keep it away from that Kijun-sen. So that's just a little bit of a warning that the market, time-wise, has just not really found its feet. Now, we've got the Chikou span is still a fair way away from the candle. So what we wouldn't want to see in an Ichimoku sense is we don't want to see this Chikou span get on the other side of the candles, because what that would mean is that the market is still going sideways, and it would probably correspond with touching the cloud. So that will remain our ultimate source of support moving forward. And just when I come in here and check this on a daily, and I know this looks a little bit messy, but the main focus here is that we had this cloud represented how nice and strong this trend was, that we failed. We got under the daily cloud, we broke below it, and now we're back here, okay, and we've just failed at the top edge of this cloud, and now the market is just struggling within the cloud. So one way or the other, we want to see, the break higher, or it's, it goes without saying, it's going to fail away. Now, the problem with this one is, let's just turn the Ichimoku off, because we've kind of looked at what we need to look there. This kind of looks, to me, just the way it's behaved, it looks a little bit more like a bear flag. Like, that just looks, just as things sit, the way the price is behaving, like it's more likely to occur than this. To me, that's just what it looks like, okay? That's just looking at the chart and technically what I'm seeing, okay? Other little telltale signs. This is the anchored VWAP for the year, okay? So we held above it, we tested it, since we've broken below it, it's now held the market, and we're struggling to get back above it. So the sellers are in control at this point. And that's even backed up by the fact that we're just hitting this retracement zone, and we cannot get through yet. I mean, you can even just look at some more classical stuff here, but it all goes together. The thing about every technique is that more or less is going to point you to the same thing. Now, what I'm seeing here, of course, is this blue line is the 200-day moving average, and this black line is the 50-day moving average. And what's occurring here is that the distance between the two is getting smaller. Okay, there's no doubt it is shrinking. Okay, so death cross, I'm neither here nor there about it. I don't really think it's a wonderful sort of indicator. I mean, look, this was a death cross and nothing happened. I mean, this golden cross worked out all right. But I think the problem is it's the short-term momentum is and that's what the Ichimoku weekly was telling us, is the short-term momentum is beginning to run towards the long-term momentum, and we're going to get to a point soon where the market's going to have to decide which way it wants to go. Now, in terms of this being a bear flag, I think that the rule of thumb, since we've sort of had this double top, I mean, is that the bear flag shouldn't get above 50% the length of the pole, which it has. So whether or not that disqualifies this as being potentially a bear flag, I don't know. But it just the way that it's come off this pivot, it still looks like a weakling to me. It just doesn't fill me with a lot of confidence that it's pushing harder. So you're just looking up here, just to finish off on this one, just on the hourly on the hard right edge. I mean, the fact that the market's sort of pushed through the retracement this way is quite good. Like, it's a little bit promising. And even going back a little bit further, when we're coming off the bottom, even this swing, that's a sharp move down, but it moved very quickly out of course, out of the retracement area here. And since then, it's held up okay. But I mean, the danger here, of course, is that we had, and this is just very short-term stuff, is that we had these lows which we kind of breached. So we had the nice sort of swing here, but the fact that we've come down, you'd want this to be taken out, because if this then starts to come down, well, then what have you got? You've got a newly forming downtrend on the hourly. So that remains a little bit concerning. But I'd imagine, I don't know if, I can only imagine that whatever happens with CCJ is going to dictate the whole space. But of course, we've got this sort of almost like a wedge forming in here. So this is going to resolve one way or the other. But because of the nature of what's going on here, I mean, it is more or less range bound, right? And you could even sort of say, well, maybe that's an up thrust, like just an attempt to break the top that failed away quite badly, and now we're a chance now that this is going to do that. That would be how I'd see that. So let's see how this pans out. But there's just not, I think that the takeaway here for this is that it just doesn't look overly strong to me. It looks more like a sort of bear flag scenario playing out. So let's finish off with some happy news, and NXE continues to be the poster child for strength, I think, anyway. So we're just here on the weekly. I've just framed this up in a regression channel. So just basically the line of best fit between the pivot highs and the pivot lows. So to me, even though, because you'd use this regression channel when it's difficult to sort of find a natural channel. So the lines of best fit, I think it's still showing that it's swinging high. There's nothing that's really upsetting the apple cart here to me. It's sort of still, doing its thing. And the fact that we've pushed away here this week and closed up a little bit, hopefully keeps us in that sort of trending higher mode. Now, what's kind of nice about this one, which is just sort of it's going against a little bit about the other ones that what's happening here, but since we had this long swing, we had this swing up here which went 18 trading days, and it rallied 27.6%, and now we've got this swing, this pivot high here, and this swing went for 27 days and was 32.6%. So this upswing has run a lot longer than well, not a lot longer, but the power of the upswing has grown since the last one. Now, I'm expecting, even though it hasn't printed yet, I'm pretty sure that is going to end up being the next pivot low. And so what we've got is that this downswing will end up being it'll be a little bit longer in terms of days, I think. So, in terms of actual, pardon me, just hang on. Pardon me, I forgot how I set up my own indicator. 12 trading days. This is 15 trading days, but this is going to be 12 trading days, only down 15.9%. So the fact is that we've got two smaller downswings and a bigger upswing. So it just shows to me that the power still remains in the market here. And couple that up with, where did the last swing terminate? Right where you'd hope to see it terminate, which is right here at the 61.8 into the golden area. So, and just back to test this sort of structure. So this is all going together quite well. You know, this just in isolation looks pretty good. Now I would probably just pitchfork that up like that. It's probably not 100% accurate, but you get the point. And then, you know, one of the targets you'd hope to see would be, well, if you could get, ideally you'd like to see the confluence of the measured move into the center line, which would be up here, but chances of getting that are probably pretty minimal because it doesn't happen very often. But that would be the general idea. We're looking for, you know, Andrew's pitchfork literature suggests that as long as this pivot holds, there's an 80% chance that we hit the median line. Okay, now that may not necessarily mean we break the top. It could be here, it could be up here, you know, but as long as that pivot holds, 80% chance we're going to at least test that median line. Now, the way just looking at this, you know, I'd be thinking about the way back. You know, and you can just see where the next area of resistance would come into the market. Okay, so you'll be talking about into these sort of peaks in this structure up here. So that would just be the first point of call to beat. All right, before we could maybe come up and challenge this. But, you know, so far so good. I think the underlying strength here, it just looks good. Even just coming back here and looking at the way that this is unfolded, this just looks like, you know, your classic three-wave correction, okay, down like that, where the third wave, the second corrective wave, was longer in time than the first one, but it wasn't as steep. We didn't drop as far. So it's the same sort of phenomenon. Even though it took longer for this to drag down, it didn't go as far, relatively speaking. And then, of course, this one just came up there, but that's a pretty good example of a measured move trade that trading algorithms would take sort of into the 61.8 into this retracement area, looking for the you know, round about this minus 23% of the whole move. Okay, so that's kind of an example there. But I think what I like here is what's happening on the flip side, because I'm pretty sure that we haven't actually confirmed the pivot here yet, but we will. And of course, if this becomes that pivot, then all of a sudden you're going to have a downswing off this pivot that is, even though it went for the same amount of time, 14 bars, we're on an hourly here, of course, didn't fall as far as the preceding upswing. And now, of course, what have we got? We've got this big break away. Now, when we just look at this really quickly, what else happened? The same thing that happens all the time. We hit the retracement and we went external, and that sets up, you know, to the measured move target where we've sort of just stopped. But what does that set up? It sets up a new trend on a short-term basis, and we've just would like to see this leg clear a little bit further away, because once we do that, then we can probably start and come here and apply a bit of Elliott. We're thinking wave 1, wave 2. We're going up for wave 3, wave 4, wave 5. We would be thinking something along those lines, but that remains to be seen. I think, like I said, I think that CCJ news, even this one, we've got the earnings due. When's that? 2nd of May. So it is coming into range as well. But that just looks like the current setup as we sit right now. So this one, once again, still looks pretty good. Everything's going together pretty well. It's all going to swing off what CCJ does next week, I would suggest. So until then, thank you very much for watching, and I will see you in the next video. Bye for now.